Hey guys, how's it going? It's Andy from Magoo Investing. Welcome back. We have just a couple days remaining left in 2019, and with only 1.5 trading days remaining, I thought it'd be a good time to talk about one of the giants in the stock market and just a company overall. And so today we're going to be talking about Microsoft, ticker symbol MSFT. Microsoft is the third largest company when I talk about overall valuation, as they recently broke the $1 trillion mark, following after Amazon and Apple. So they're one of the largest companies out there, and they have had an incredible year. And so the Microsoft is a part of the Dow Jones Industrial Average, one of the 30 largest companies out there, and they have outperformed the market overall, being up, I think, 55% year to date. And so Microsoft has been a company that I've traded in the past, and then as the market rebounded this year, I kind of haven't been looking at them very much. And when I show the charts later, you'll see just how steady this company has been over the past couple years. And so in today's video, I'm going to be talking about the long-term outlook on the company, mostly because there's not really a lot of swing trading to be done with Microsoft, but I'm going to be talking about what I've seen in the past with the company, talk about the fundamentals of the stock and the company, and then see what the analysts have for the 1-year outlook for Microsoft. Before we get started, I got to say that I'm not a licensed financial advisor, and I'd highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. And so Microsoft is sitting pretty close to its 52-week high and all-time high. And most of the times that I talk about that on this channel, it's maybe we'll wait for a better opportunity. But Microsoft, for how reliable it's been, how well known it's been, and how cemented it is in the 3 major industries that they're in, I don't see a lot of horrible things about the company. And so when I talked about GE a couple weeks ago, I talked about how GE is a company that does a lot of different things, and I don't think they're really good at any of those one things. And so that was kind of my reason why I don't like GE as a company. Microsoft, on the other hand, has their 3 massive subsections of their company. And so they do stuff with cloud, they do stuff with the Microsoft Office stuff, and then they do stuff with physical electronics. And so those 3 industries make up 1/3 of their company's total revenue, which I think is really impressive that they have it evenly spread out so well. And when you look at any of those 3 areas, it's hard to say a lot of poor things about it. Their cloud stuff, pretty good. Their physical electronics, you have the Xbox, you have all of the computers, that type of stuff. Obviously, they're not the highest end, but they bring in a lot of money, and there's a lot of people that use them. And then finally, the Microsoft Office and that type of stuff is one of the most recognizable just products out there. Everyone knows about Microsoft Word, Excel, PowerPoint, that type of stuff. So they're very good at the 3 main sub areas of their company. And so it's hard to kind of pinpoint one area that they're lacking in. But with the upcoming future of specifically the release of the next gen consoles, I think it's going to be interesting to see if those percentages switch up a little bit. And so Microsoft has a long history of acquiring other companies. I was just kind of looking to see what the largest acquisitions that they've had, and I went through the Wikipedia page and I was just scrolling all the way down, and they've done a lot since the late 90s. And so one of the ones I want to talk about is their acquisition of Skype in 2011 for $8.6 million. And so Skype has been one of those programs that I've used for such a long time, but didn't really realize that they're Microsoft. And so it seems like a very good deal overall. But one of the acquisitions that people talk about when they think about Microsoft and how they've acquired so many companies in the past is their acquisition of LinkedIn in 2016. And so LinkedIn is pretty much the social network or the Facebook equivalent of being a professional or being in the job search. And so they found their niche and they've done incredible in there. And so in 2016, Microsoft acquired LinkedIn for $26 billion. And so one of the results of acquiring that is that they accrued a lot of debt. And so one of the main things that I look at for a company is their debt to equity ratio. And so when you look at the charts over the past couple years, you see the spike in 2016 when they went in and got an additional $20 billion in debt to help pay for this acquisition. And so as long as you know where the debt's coming from and it's not just their operating costs accruing debt every year, I'm pretty okay with that. And so in the past couple years since that major acquisition, the debt has decreased. And I think the debt to equity ratio is at a very manageable rate. Obviously, I don't want it to really go any higher unless they're acquiring more companies, but for the large debt that they brought in because of LinkedIn, and then the decline in the debt over the past couple years, I think it's very manageable. And so Microsoft does actually give out a dividend. It's pretty small, around 1.2 to 1.5% depending on the year. And so that's not really an incredible dividend. But when you're having 55% returns this year, I'm okay with that. Also, one of the things I like to look at for dividend stocks is the payout percentage, and that's how much dividend they're paying back to the investors compared to the earnings per share. And so ideally, you'd like it to be below 50%, and Microsoft is looking pretty good with 29%, so almost 30%, and I'm definitely all right with that. Their earnings have been increasing over the past couple years, the dividend has held pretty steady, and overall, I don't think that's a red flag. And talking about earnings, over the past 12 months, their earnings have been pretty steady. When I look at a lot of these companies recently, when I've started focusing on fundamentals, you normally see kind of an increase in the earnings close to the holiday season. And when I throw up the charts for the earnings right now for the past 12 months, it looks pretty steady. It seems like every quarter is pretty stable in the amount of earnings. And I think that's a really solid thing. When you have companies that are very dependent on the holiday season to make their money for the year, it kind of puts them at risk if maybe the overall economy is starting to slow and people aren't spending as much money. It can really hurt the company. But when Microsoft has been very steady every quarter on how much earnings per share they're bringing in, I think it lowers the amount of risk involved with the company. And so one of the other fundamentals that I like looking at is the PE ratio, and that is a price over earnings ratio. And that's kind of an indication on how overvalued or how undervalued a company is based off of how much money they're bringing in every year with earnings compared to the price of the stock. And so there are some stocks that you can kind of look at and go, oh, you know, that's a pretty low PE ratio, and maybe they're undervalued. Microsoft has had some couple of spikes in the past when maybe earnings have gone down or the price has increased rapidly, but looking at the PE ratio, I don't see anything that kind of pushes me in one direction or the other. I think it's just very stable. And when you go look at how stable the charts have been in the past couple years, or at least 5 years, it makes a lot of sense why I don't really care about PE ratio to see how overvalued or undervalued Microsoft is overall. So when you're looking at a stock for maybe a long-term investment, it's very important to look at the trend of how the revenue and earnings have been increasing over the past year at least. And so when I throw that up on the screen right now, you can see that everything is green. Everything has been increasing rapidly in the past 12 months, and the 12-month future for it looks pretty solid as well. So when you're looking at something as well established as Microsoft, you're not going to be expecting to see some really massive red flags. The reason I'm talking about Microsoft today is it's a great example of blue chip stocks, which are the largest and the industry leaders in whatever sector that you're talking about, how they can have incredible returns depending on the year. And so when Microsoft has a 55% year, that's probably not going to be happening anytime soon. But the reason that it happened is the whole reason why I think it's very important to be learning how the stock market works earlier rather than later. We're currently in the longest bull market in history, and last winter we almost went into bear market territory. However, we did not. So we're still in that bull market. But when the market goes down 15% overall, it gives you a lot of opportunities. And so instead of currently the position I'm in is I'm looking for great stocks at a really great discount. But when the stock market fell 15% last year, all the stocks got pulled down. And so Microsoft is a great example of being one of the most recognizable companies out there and still having incredible returns in 1 year. During a normal year in the stock market, you're expecting between 7 and 10% growth every year. And so the reason that you have this opportunity is the stock market pulled everything down. Microsoft has been steady in its earnings, its fundamentals, and the market has rewarded it really well. And so when you look at some of the other stocks, the blue chip stocks in the Dow Jones, they've had good years, but Microsoft is one of the very bright spots in the Dow Jones because they're such a stable company. They've done incredibly well over the years, and the market really rewarded them. So I think this is a great example of you don't have to try to find the diamond in the rough every time. Currently, when the market's all pretty much sitting at 52-week highs and all-time highs, you kind of need to be a little more picky on which stocks you can look for. But when the market pulls everything down, everything's at a good deal. And so with that being said, let's go hop on over the charts and take a look at Microsoft, ticker symbol MSFT. All right, so here we are on Robinhood today. As you can see, I'm recording this on Sunday, and Bitcoin has been moving pretty well today. So my portfolio is up almost 0.5% today, even though Bitcoin is the only thing that's currently being traded. So let's go head on over to Microsoft, ticker symbol MSFT, with an 88% buy rating and 243,000 people owning it. So it's a very popular stock on Robinhood, and the analysts have a very good feeling about Microsoft going forward. Here's the 1.3% dividend ratio. PE of around 30 currently, with 88% buy rating, 12% hold, and 0% sell. So for a long-term investment, that's what we like to see. And here's the steady earnings growth that we also like to see. So as we come on to the charts, we're on TD Ameritrade today. You can see this is the 4-hour, 180-day chart, which is my swing trading time frame, as you can see, stock has done pretty well in the past 180 days. There was a nice little horizontal pattern which could have been played. The margin for profit is under 10%, so it's not super attractive. This wasn't really on my radar because it's never really on my radar for swing trading, but as you can see, it broke out of this with earnings and then has been pushing higher ever since, and it's currently at its all-time high. As we go back to the longer time frame, you can see how incredible the returns on Microsoft has been. As we come over here and go back even further, this is the definition of steady and is the reason why anybody that was looking to start a long-term portfolio, I think Microsoft has to be one of the cores for a potential stock to add to that portfolio. Because, I mean, look at it. Those returns are incredible. Even when the stock market fell last winter, did not go that far down. But since then, when the stock market recovered, Microsoft has been doing incredibly well since then. So we come in here. These areas that I've charted out were areas where I had been swing trading in the past. I like buying close to $100, $105, and then sell around $110, $115. So that happened a couple times, and I made a decent profit. Also, there's a really nice upward trend right here that I also played, but since then I have not really played it because the market as a whole has been going up. So as we come onto here, you can see the dividend, not super impressive, but you know, dividend's a dividend. As we come onto here, let's take a look, see what the analysts have to say. As you can see, 56% year to date, which is fantastic. And then we come down here, they have the upper end at $200 and the low end at $155, only down 2.5%. So when you're looking for a long-term potential play, that's what you like to see, when even the low end on that forecast is only down 2.5% and the upper end is almost 26%. So I kind of agree with them on that one. The median they have pretty level. I think it'll probably have maybe a 5 to 10% year. I don't think it's going to have the 26% that they have for the upper end here, but I think it looks good for the upcoming years because, gosh, look at those earnings and revenue growth. They all look solid. Going over to Yahoo Finance, they have it as a buy, overvalued, up in the short, medium, and level on the long term with a 1-year price estimate of $163. So they still think it has a little bit of room to grow, not a lot. So it seems like they're kind of on the conservative end, just like CNN, just based on the fact of they think it'll go up a little bit, but not too much. I talked about how when the market fell last year, Microsoft was one of the major reasons why I got pushed up higher. So they don't think it's going to continue that much longer. But, you know, I think for long-term investment, I think that Microsoft is in a great spot. And so now we're back pretty quick after that. Looking at the stock charts for Microsoft, there's not a lot of really important zones you got to look at. I did show the areas where I was swing trading it for a little bit when it was hanging around $100 to about $110, but it has pushed past that pretty quickly. So Microsoft is one of those great stocks where if I was starting a long-term portfolio, I'd feel very confident taking a position. They're one of the largest and most reliable blue chip stocks out there. I really trust their company, and I think the long-term outlook on the company is great. So let me know what you think about Microsoft overall. Do you think it still has more room to go, or do you think it's going to kind of go back to its normal 10 to 15% every year, and it's not going to have another 55% year? So thanks for watching this episode of Robinhood Top Stocks. If there is a company or an idea you'd like me to go over in a future video, please put it in the comment section down below, and I'll get to it as soon as I can. Thanks for watching. I hope you guys have a fantastic end of the year, and I'll see you in the next video.